If I had to start again from zero today, knowing everything I know after 12 years in the markets, this is exactly what I'd do. And I'll be honest with you, it wouldn't look anything like what most people online are telling you to do. So the very first thing I'd do before I even look at a single stock is get my money out of my savings account and into the right place. Money sitting in your savings account is wasting away. You've heard me say it before, I think this is a guaranteed loss account because the rate of interest they're giving you is less than the cost of everything else going up. So in real terms, you are losing value of your money every single year. We want to make sure that the money you're trying to save or keep safe is actually being able to be put to work for you, not just waste away. The first thing I would do is move money out of your savings account and into an account where you can invest from. Now, what that's going to look like in stocks is a broker. So there's loads of brokers out there, loads of good ones, loads of bad ones. So please do your research. If you're in the UK, I would specifically look for a broker that offers a stocks ISA, because a stocks ISA means that any profits you make within that are 100% tax-free. So there are, as I said, many options out there. Personally, I use Trading 212, but I'm not sponsored by, I'm not affiliated. So do your own research, use other ones if you want, that's absolutely fine. But they work well for me. One of the reasons I think those guys are good, they meet my checklist of what I look for in a broker. So FCA regulated, very low fees, easy to use, and the stocks ISA, as I mentioned, because the thing about a stocks ISA is you can put in, like you can deposit into it up to £20,000 per year and then use that to invest in stocks. But whatever profits you make, no matter how much profit, you can make 100 grand if you want profit, that you'd get that and then you can withdraw it, spend it, do whatever you like, completely tax-free. So pretty good. Now, of course, we're talking about when you're first starting out here. So I don't think you should just put all of your money into a brokerage account straight away and invest it all. No, I think you should start small. Actually, I tell people there is no minimum, but what I'd probably suggest is make sure that you start with an amount of money that you're going to take seriously. If you start with a couple of quid, there's no way you're going to follow your strategy. You're not going to take it seriously. You're going to be like, oh, who cares? It's going to feel like a gamble. So what's the point? So start with an amount of money you wouldn't want to lose and you'll take seriously, but not so much that it keeps you up at night. If it causes you stress or what discomfort, like physically, then that's obviously too much as well. So whatever number that feels like for you in the middle there is probably a smart amount. The reality is a lot of people like round numbers. So whether that's £500, £1,000, whatever, that's your choice. So make sure it fits within those two parameters. Honestly, this whole process of removing money from your bank account, setting up a broker and putting the money in probably takes you about 10 minutes in total. But most people spend years, maybe even decades, even starting that step. So just get that one started straight away. So now your money's in the right position and ready to go, which means we can get to the part you've actually been waiting for. So when it comes to picking stocks, I have a very specific set of filters that every single company has to pass before I put any money into it. So when trying to choose your first stock, you have to have a criteria. I can't overstate this because having a strict criteria makes my life so much easier, because I'm looking at like the size of the company, what's the profits they're making, the debt they've got, like who's actually investing in it themselves already. Like all of these things make sure that I'm only investing in the best of the best companies, and it makes my research and decision making fast. If you don't have a strict criteria, you're just guessing. So I make sure I'm only interested in stocks that have met every single one of my criteria, that pass the tests, and then I'll take it to the next stage. A good analogy I could use for this is like if you were moving to a new house. When you're moving to a house, you have a criteria, don't you, of what you're looking for. You want a house in a certain area, a certain number of bedrooms, probably within a certain price range. Like you have that criteria beforehand, so that when you're searching for what you want, well, it's a lot easier to find exactly what you're looking for. Or you wouldn't go and buy a house with no criteria, would you? You wouldn't say, I just want to buy a house, and then just go out there and look at every single thing there possibly is. That would be mental. But when people go to stocks, that's the exact attitude they have. They just dive in with no idea. It's, I've heard of this company, or my mate told me about this one. So, and they think that's a criteria. No, you've got to have the same sort of strictness in what you're looking for there. Now, once I've searched the stock market to see what companies meet my criteria at the moment, there could be loads on there that actually do meet what I'm looking for, but I'm not going to invest in all of them. In fact, I only invest in a maximum of 5 stocks at a time. Now, this might sound like a very low number to a lot of people, particularly those people who have been told that, oh, you need to spread your risk by getting into loads and loads and loads of investments. That's not true, trust me. People think that, yeah, buying companies all over the place is spreading risk, but it's actually just putting risk in more places. Just buying more things doesn't make it less risky at all. So instead, if I pick a small number, I can be very, very selective. And this is a lesson I got from Warren Buffett, and he's done pretty well for himself, so probably knows what he's talking about. So for example, let's say of my 13 criteria, I find a company like Google, and I look at Google. On this week I'm looking at it, it seems to meet every single one of my 13 criteria. Great. For me, I'm like, this looks like a great opportunity. That's when I then move on to the next stage of the strategy, which is when to buy, how much to buy, all of that stuff. But however, I could also look at a company one week that's in the news a lot, and I look at the fundamentals and it just doesn't meet any of the criteria, or meets a few of them, but others it doesn't. Well, it doesn't matter how popular that is. It doesn't matter how much people are talking about it. I'm not going to invest in that. I'm not going to put my money into it, because that's just investing on hype, which is not a strategy. So unless it meets the criteria, I'm not interested. So now you've got your stocks picked and you've bought in, but here's the thing most people don't realize. Buying is actually the easiest part. And before I get into that, if you're watching this and thinking, okay, this is actually starting to make sense, I run a free online masterclass where I walk through my full strategy step by step. The link's in the description. But let me show you what happens after you buy, because this is where most people lose their money. So once you're actually in a position, here's what my day-to-day really looks like and why the whole thing only takes me about 5 minutes. Now, a lot of people hear me say this takes less than 5 minutes a day, and I'm sure they think that's impossible. But the reason it's less than 5 minutes a day is because there's actually not a lot you need to do to maintain this strategy. So for example, I'm in each of my 5 investments for, on average, 2 to 3 months. Or if you're in something for 2 to 3 months, you can probably imagine there's not too much you need to do every single day to monitor that. So really, what my investing looks like, or what my 5 minutes a day looks like, I'll open up my laptop or my phone, have a look at my stocks, the ones I'm currently invested in first. I say, all right, has this stock dropped to a good enough price for me to buy some and get a good deal? Or has that stock gone up enough for me to act on the profit? Or if you're just looking at 5 different stocks to say, has it gone down enough or up enough? That doesn't take too long, right? You just quickly flick through those. Now, with the rest of my 5 minutes, I'm looking at the other opportunities that I'm thinking of getting into, but maybe aren't quite ready yet, or maybe I haven't got space for them yet in my 5. But this is probably the beauty of the investments, because once you've found the stock, you've decided when you're going to buy, when you're going to sell, and you've set all that in place, or you don't need to do that again tomorrow or again the next day. That would be overkill. Like, you can't do the same process more than once. It'd be like trying to bake a cake more than once. That'd be crazy. So once it's done, it's done. And it's really just like sit back and let it play out. And that's why this takes such a low time commitment to make work. And the sort of hidden advantage to doing it like I do it is if you're deciding where you're going to buy, where you're going to sell, you do all that well ahead of time, like before you put any money on the table, well, then it removes the emotions, because you already know where you're going to buy the stock. You know where you're going to sell the stock. You're not waiting for that moment and then sitting there thinking, oh, should I buy now? Or, oh no, I feel a bit uneasy, I shouldn't buy yet. No, you know where you're going to buy, so you set those orders and then they're done. You just sit back and let it play out. And my goodness, I've invested in the complete other way as well, particularly when I used to do day trading, where it's high emotions and you're trying to fight that all the time. So this is a piece of cake. And if you've made it this far, you're probably wondering why I haven't mentioned trading once in this whole video. And there's actually a really important reason for that. So the reason I don't trade anymore, even though I did it full time for years and actually made pretty good money doing it, is because I realized it was costing me everything else. On paper, the life of a day trader sounds great. Got your screen, you sit wherever you want in the world, as long as you've got a Wi-Fi connection, you're trading the markets, making money. But the reality behind the scenes is totally different. Very high stress, very low free time, like no headspace, no peace of mind. Very, very easy to get overwhelmed with that kind of career. Because if you're having a good day, well, there's a good chance that your emotions will take over and you get a bit over enthusiastic and then end up losing money, which is going to turn into a bad day. Or if you're having a bad day, you're not feeling your best, there's a good chance it's going to get a hell of a lot worse. So that constant back and forth it takes a real toll on an individual. And honestly, after I've been doing it for 4 or 5 years, honestly, I don't think this is sustainable anymore. I'm not living the life I really want. Like, money coming in is not the be all and end all. Like, the life you're living as a result of that money is a lot more important in my opinion. So that's why I knew I had to pivot and I had to make the strategy that I have today, which is the 5 minutes a day investing strategy. And I think where the confusion comes in for a lot of people about the difference between trading, investing, because the terms get used quite interchangeably. A simple distinction is the time that you're actually in the trade or the investment. So if you're buying something and trying to sell it within seconds, minutes, hours, days, that would be trading. If you're buying something and expecting to hold it for months, years, decades, that would fall under investing. So it's like an easy distinction. There are some other bits too, of course, in terms of risk and like the actual approach, but that's the big distinction. Now, what I do actually sits kind of nicely in the middle. I call it medium-term investing, because we're sort of taking the best from both sides here. Because if you do day trading, obviously very high risk because you're making lots and lots and lots of different decisions all day, but you're getting in and out, in and out. So you do get the money, obviously you lose the money too. Or if you're doing long-term investing, like decades, it's very low risk or lower risk, but the money grows, but you don't actually get to enjoy that as well, which I didn't like about it. So what we do here in the middle doesn't take a lot of time, just like investing, because we're picking fundamentally strong companies, you're in them for extended period of time, but because we're selling too, we actually get to enjoy the profits along the way. And that's actually what I love the most about this, is you not only are building wealth, but you actually get to experience the wealth and the freedom it gives you too. So that's exactly what I do if I was building this from nothing in 2026. And if you want me to walk you through the full strategy, the filters, the exact buy and sell process, I run a free online masterclass. The link's in the description and I'll see you in there.